My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. There's always another sell-off, right? So on a tepid day where nothing much really happened, Dow sliding 10 points, S&P declining 0.11%, Nasdaq gaining 0.14%, let me tell you how to profit from the next sell-off. You need to remember what got plastered the last time around and then bounced right back, because that's what we're looking for on Mad Money. No dross. Let's get right to it. Let's start with Chipotle. Last week, this stock got crushed by people who didn't like the quarter. I told you they were wrong. Why? Because those people knew nothing. Right before the big game this weekend, I picked Chipotle as our kicker in our NFL championship portfolio. I wanted people to see that this company's capable of kicking a 62-yard vehicle. Well, that was dumb as plywood. Stupid metaphor. I should have said that Chipotle is a tight end like Gronk, a player who can block and catch and score at will. This stock had just dropped from 1,523 to 1,479 off that quarter, even though they had 11% same-store sales in January. This is unbelievable. I really don't care about November, December. I care about the most recent month, because that's how you're supposed to think. I was taught that way. I flagged that action in the stock, and I said, this is wrong, okay? This is wrong. So if you just bought the darn thing, you do very well. Sure enough, today, Chipotle hit a new all-time high. Don't sell it. Right now, the company is just banging it out with delivery and all sorts of new ways to handle takeout. They're doing these incredible numbers against pre-COVID comparisons when the stores were packed. Going forward over the year, well, and think about it, year over year, they're going to get much easier. Why? Well, because you're able to sit down and get your cilantro lime roasted cauliflower, which is unbelievably good. I started pounding the table in Chipotle roughly 1,000 points ago, because they finally reached the 18th month mark after that last health scare. And my research shows that the public tends to forget after 18 months. Since then, you've had a spectacular win. They barely skipped a beat when the pandemic hit. How could the market be so wrong? Give me a break. The market's insanely wrong every day. GameStop at $300. There are kinds of reasons that stocks get mispriced all the time. Most common, people get scared when they see something go down. So they figure there's got to be a reason. They think it's rational. That's true, but sometimes, like in the case of Chipotle, it's a bad reason. People are looking at the older numbers, not the newer ones. I'm betting it's got more room to run because this is telling you. Why don't we try another one? Let's go to Constellation Brands. Not that long ago, we spoke to Bill Newland's Constellation Brands. Big brewer, U.S. rights to Corona, Modelo, only real growth in the beer industry. So also some great wines and spirits. I thought they shot the lights out when they reported. I was cheering. Everyone's stuck at home. No bars are open. Yet, they just pulverized what I thought they could do, putting up just borderline impossible numbers. I was like, yes, we have them on tonight. We booked them, Regina Gilgan, my executive producer, because we do a lot of stuff back and forth about booking. Now, I own a mothball small plate Mexican tavern in Brooklyn. Yeah. It said, no, I'm going to open it. I was so concerned that the new Modelo they just launched would be heard. Because who has it, right? You can't get it at a bar. You can't get it at a restaurant. Instead, the closures actually helped them. I'm not kidding. Constellation might have actually made less money with the bars open because they're making a fortune selling beer to people who are stuck at home with nothing better to do. Even better, Pacifico, that great long neck, my favorite brand. Wow, it's a good beer. It's doing incredibly well. But you know what? They can't produce enough Modelo because the demand is off the charts. You know what? All that stuff is a sideshow compared to the two biggest compositors. Constellation's new hard seltzer, maybe the biggest home run we've seen in years. And Bill Newlands, the CEO, told us to get ready for a cannabis explosion now that the Democrats are running a show in Washington. Remember, these guys own a big chunk of cannabis growth. They're the best one. And they can acquire the whole thing once the pot gets legalized. I've known Bill forever. I even put on a cannabis seminar. I had him as a keynote speaker. The last time we had him on the show, he was more bullish about marijuana than I've ever seen him. The drinks, he says, are amazing. I found myself I thought, geez, I ought to open a cannabis bar once the world goes back to normal. Well, what happened? Well, the dream was shattered immediately. Both stocks got hammered. I mean, really. Constellation belly fell from 230 to 210 over the course of a few weeks. Canopy fell from 30 to 29, not a big deal. But the market was just dumb. It was dumb as a bag of hammers wrong. Today, Constellation at 233. Okay? Look at this. We have them on. I love the quarter. Stock gets crushed, okay? And now we're talking up on the same set of numbers. It goes there. He comes on and says, listen, marijuana, pot, whatever, cannabis is going to get approved right here. No one listens. And then look at this. This is going to take out its all-time high at 240. Canopy surged from 29 to 49. Bill Newlands came on and he gave you a twofer. But you had to listen. You had to know that he was right and the market was wrong. Third example. Last year I met David Simon at the Super Bowl in Miami. That's David Simon, the amazing mall operator, not David Simon, the guy who made The Wire. I love The Wire. When his stock, Simon Property Group, got annihilated by COVID, I reminded people that this man has generated $33 billion in dividends and told you that I had faith in him as the survivor, the one who would get through COVID, other malls dropping like flies. Well, today Simon reported, and it was remarkable, his malls are doing incredibly well because they are in all the best locations, something you could have seen coming because he practically shouted it out on the last conference call. With everybody getting vaccinated, Simon may be among the top stories out there for the reopening. Because you know what? People are shopping. They're shopping if the place is nice enough. And the competition, jeez, it's been wiped out. Get this. On top of, no one even knows this. On top of this, Simon recently bought JCPenney out of bankruptcy. You know that the company's already turning around? JCPenney. His plan could generate a ton of earnings before interest, taxes, depreciation, and amortization. They wouldn't worry too much about taxes. Lots of people think, go Google JCPenney. You'll see. Everyone says it's dead. It's not even open. But it's now owned by the landlord. And I see some terrific possibilities. Watch for Penny to come back. Plus, if some of the stores end up getting closed, they just bring in a new tenant who pays an even more expensive lease. Even after this move, even this incredible move, I would be a buyer because the stock's the cheapest it's been relative to its performance since 2008. With these examples in mind, you're probably saying, okay, thanks for nothing, Cramer. Give me something you can make on right now. I do. I have it. Okay, the next one's really mispriced. And the next one, it's Federal Realty, FRT, reports Thursday. This is another real estate investment trust. Just like Simon, who has the best malls, this is shopping centers. Don Wood. There are different things, shopping centers and malls. Don Wood is the CEO of Federal Realty. Now, in this COVID, in this terrible epidemic, he has reinvented these stores to have them touchless transactions. He's turned mixed-use apartments, retail, and office buildings into a science. Remember, people are moving from the cities. They're going to these properties. Same thing with the businesses. Restaurants are coming out of hibernation. On the last conference call, Don gave this impassioned plea, explaining why he didn't slash the distribution, because he didn't need to. The analysts were harsh, even unforgiving, like this man did not know what he was talking about, as if this man was just some sort of hopeless optimist swimming against a riptide, waving his arm at the lifeguard saying, hey, I'm not in trouble. Man drowns, saving dividend. But as more people get vaccinated, I think Federal Realty will be in the running for what to do once it's safe to shop again. Look at the numbers. His tenants are doing every bit as well as Simon's. The best part? This is another last man standing. I don't even know about any other shopping center REIT. I mean, they've all been pulverized. Still, people don't seem to get it. But that's where the opportunity comes in. I say buy some before the quarter, buy some after, when the no-brainers and the brainers coalesce and say it wasn't that good. They're wrong. I'm right. Hubris. Guilty. Here's the bottom line. The market is often wrong, especially during earnings season. You need memory to take advantage of these temporary multi-day declines that I've just shown you. We have a guest tonight with a stock that's been blown to smithereens off a great quarter. Strauss Zelnick from Take Two. Last time he was on, the stock had dropped from 175 to 154. By last night, it rebounded to 213. Now let's pull back to 200 again. You know what? You're getting another shot. Take it.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.